analysis of how they achieve their motto of providing, I quote, flexible leasing solutions to help automate and modernize agriculture, manufacturing and construction related projects. We're talking here about the Mauritius Leasing Company, which also has banking interests. Ashraf Esmael is the CEO of Mauritius Leasing Company, part of the retail banking conference here in Africa. Thanks so much for your time. Just talk about the core issues coming out of this retail banking summit. 80% of Africa's people unbanked, 80% of Africa's people needing banking services. There's a real need for a paradigm shift. It just doesn't seem to be happening fast enough.
Well, definitely, I think there is a paradigm shift that's going to be required, but it's also in terms of also understanding whether these customers out there who we're calling as the unbanked really want to be banked or not. What they really want is an enabler for them to achieve their business goals, their lifestyle goals, their personal goals. And the banks will need to rethink how they engage with these kind of customers out there and how they fit in culturally and in the communities they are serving. So the typical approaches of bricks and mortar that we've seen and the branches that have been so far been the norm will have to be rethought. And what we are looking at is mainly a reinvention of the distribution system of how banks are going to be present in the communities, serving the customers who are currently underserved.
I mean, obviously, when you talk about there's no need to be thinking about branch expansion, it speaks to technological innovations, but there's also the cultural element that you've mentioned and the fact that banks often provide high-end products for high-end consumers. A large proportion of Africa's people, although emerging as a working class into middle class, they're still very much a big group of people at the bottom of the base, and there's a sense that we just don't have banking services for that consumer.
Definitely, we can't have a one-size-fits-all approach. So typical products meant for a different market with different economic realities and different lifestyle have got to be reinvented, redesigned, and made to adapt to these kind of communities. So what we are talking now is going back in a sense of our own experience, what we've seen in the past. Our own company started initially as an insurance branch back in Mauritius in the 70s. And at that time, we can say that the situation was almost similar to some of the African realities in the market today. And we're talking about economies at different stages in their evolution. And what we've seen in the past working, which was distribution systems where people had to go door to door and selling products, which was, collection of money on a weekly basis. These kind of approaches probably are still relevant for these markets. And we can't use sophisticated westernized models to be successful in African realities.
So what's the compromise I nearly said a country, on a continent like Africa, for instance, where people are starting to come into their own? Banks don't have very good credit risk mechanisms, and people still want to own assets, property and whatever the case may be, but may not have the collateral or have acquired enough money sufficiently to enter that space. What becomes a viable midway?
I think there are two questions in there. One is looking at how the banks are going to modernize the infrastructure and also professionalize the way they do business so that there's a trust that gets built in. And here we're talking about the regulatory regime and what they need to comply and what not. And in that case, I think there we might even look at ways of doing strategic alliances with other partners elsewhere in the world. And this kind of approach, I think, is working quite successfully for us. We've done that in Kenya, where we have a presence with the insurance company, which is the second largest investor in Equity Bank. And these kind of approaches where you have got partnerships will help modernize infrastructure, business approaches, and the way business is conducted. And secondly, I think we're talking about also how these products that are going to be brought to these markets will be fitting in terms of assets that are already out there, looking at ways of doing banking with an asset-backed model, a bit like we've seen on the leasing front. Initially, when we've done that back in the 80s, we were talking about the industrialization phase of Mauritius, where we had a lot of capital expenditure that needed to go in the industry, where these models were really needed. And I think this is a reality today. And in some markets, an asset-backed model is probably the way to go, to basically bring equipment, bring new kind of activity in the community.
Islamic banking is becoming increasingly a fashionable phrase. How much of a reality is it? Because a large proportion of the African population, in fact some would say a majority of Africans, are actually Muslims, and yet we're not seeing banking products that speak to their cultural and religious lifestyle.
That is an interesting one, because we've seen that this is a market that has it's a phenomenon that actually had a very phenomenal success, and we've seen asset growth of up to $1 trillion in terms of Islamic finance. But why is it not happening in Africa? I think there are three dimensions to it. One is the regulatory aspect, one is the operator aspect, the banking concerns that need to invest in that, and on the other side there's also the customer base. So you need to have a profound education of the whole spectrum of different players in the economy, so that regulators are comfortable, they understand these products, they understand this business model and are ready to adapt to it. And also for operators to feel comfortable enough to invest in education of their own people and in designing their own systems and processes to fit in this new
Is Islamic
banking model.
fundamentally different to mainstream banking as we understand it? I'm told that it operates on a different interest rate principle.
Interest rate, interesting, because it's not based on interest as we know it. This is a model which is typically asset-backed, and it's this is a model which has evolved since 1400 years now, and it used to be a model that was trade-based. Trade-based, using assets as the real driving factor and as an enabler of business activity in the communities. So I think this is a very relevant model that has proved to withstand the shocks of what we've seen in the past few years, and where we don't have real assets but speculative assets. But here we're talking real assets on which banking can be done, banking can be conducted in a different way.
And very briefly, finally, the regulator, you mentioned them, and of course they all have different priorities, but the case is today international best practice requires that banks subscribe to Basel III. We've seen, for instance, Nigeria was a pertinent example of why it's important to introduce risk mechanisms, protection mechanisms, why it's important to have capital adequacy, why it's important to have liquidity in financial systems in Africa. Is enough attention being paid across Africa on these issues?
I think this is more relevant nowadays. I think the rules are becoming ever more stringent, and we're talking about proper capitalization of banks, and in the process there's bound to be some reshaping of the banking landscape. You might, for example, see some consolidations happening, some restructuring of the bank's capital base and capital structures, and also what we would probably be seeing happening in the case, I think Standard Bank is an example where the Chinese bank actually bought 20% stake, and we need to look at ways of partnering and of introducing strategic alliances that can help overcome these regulatory systems approaches, and also capital input in those banks.
You've been wonderful. Thanks so much for your time, Ashraf Esmael, CEO of Mauritius Leasing Company.